The U.S. economy had the best performance in more than a year, according to this morning's GDP report. Stuart Hoffman of PNC Financial Services joins us now to discuss the economy and his outlook. Mr. Hoffman is the chief economist there. Welcome.
Thank you, Laurie. Glad to be here.
So let's start with the GDP. We learned that second quarter GDP was revised upward to a negative 0.7% from negative 1.2%. So is this consistent with what most people are talking about, that the economy is slowly gaining steam? We're in the early stages of recovery.
Yeah, I think last quarter, it's not a material change when you have that small revision, but it is pointing in the direction that would be the last quarter of GDP decline. The quarter ending today should show a positive number. We at PNC have around 3% for GDP growth. Some of that will come from consumer spending, a turnaround in housing, which we haven't seen in well over 3 years. Clearly some government fiscal stimulus showing up in there, and probably some improvement in exports because the world economy has started to recover. It's not uniform across the globe, but it's strong enough in Asia and India and Europe that the U.S. is benefiting.
Isn't that a huge jump, though, to go from minus 0.7% all the way up to 3% growth in one quarter?
It is a big jump, but if we go back to the first quarter, we were down, I think it was almost 7%. So actually the biggest change was down 7% to down 0.7%.
That's
so
an important comparison.
That was a real sharp, slowing in the economy. And now we're rounding the bottom of what I call a U-shaped recovery. And with that, I think we're seeing the economy start to come up. Now, GDP, industrial output, always precedes a rise in jobs. So on Friday, we'll get the employment report. We had ADP today, down, a little disappointing, down 254,000. Our call for Friday is down 190,000 payroll jobs, and the unemployment rate probably moves up from 9.7 to 9.8% in September.
We've been speaking exclusively with former Federal Reserve Chairman Alan Greenspan.
Yes.
And some of the headlines, some of the things he said, unemployment will crest, or it's cresting now, and also he, as you are as well, expecting a 3 to 4% improvement in growth within the next 6 months. So let's stick with the unemployment issue right now. Do you feel similarly that we're seeing a crest?
Yeah, I think in terms of the unemployment rate, the crest is a little out ahead of us. We haven't quite hit the top of the wave. We get it to 10%. Probably in the fourth quarter, early first quarter, and it sort of plateaus there. It's sort of, if you looked at a picture, it'd be like an arch. Of course, a U that's upside down for GDP is an arch for the unemployment rate. We actually think we'll start creating jobs in the first quarter of next year. So we're not at the point where we created jobs. If unemployment claims, initial unemployment claims, fall down to around 450 to 475,000, which we think they will, we actually might put some plus signs in front of the payroll job numbers by first couple of months of next year.
Where will those new jobs, what industries will see the biggest job growth?
Well, I think you will see some construction and housing related, not non-residential. We think we'll see it in financial services, in some of the professional services, accounting, architects, probably bigger job gains in the eds and meds, education and medical field, and probably, of course, some government jobs that will either be created or saved as a result of what's going on with the fiscal stimulus. So probably not in manufacturing. And I don't believe total construction jobs will rise because of the weakness in the commercial side of construction, even though the housing side is finally making an upturn.
Does the jobs market have to recover at a speedier rate for the housing market to buoy the housing market further?
I think, well, the housing market is already off the bottom. Yes, improvement in the job market will reinforce the improvement in housing. More people will be able to qualify. Their credit record will look better. They'll also have the confidence. We have somewhat of a crisis of confidence. We'll also have the confidence if the unemployment situation is improving, cresting in the rate, or bottoming in terms of the numbers, to reinforce an improvement. Houses are really very affordable. We haven't seen them this affordable in 8 or 9 years, and mortgage rates are near a record low. So yes, a peaking of the unemployment rate, I think, will reinforce continued gains in housing and probably a full bottom in housing prices by next spring.
All right, sorry to make a severe turn here, but one big concern today, it drove stocks lower earlier in the session, was the outcome of the Chicago Purchasing Manager Survey. Came in weaker than expected. So does that give you any pause to have a little bit of concern about your U-shaped forecast for recovery?
Not really. I always think of this in terms of ebbs and flows when you look at monthly data. And the economy had a pretty good move forward in July and August. Looks like it fell back a little. The Chicago Purchasing Manager was down below 50, sort of the break-even line. But the Milwaukee Purchasing Managers was up a little. The index from New York was up. Chicago is important. Tomorrow we'll get the National Purchasing Managers, or ISM. I still think the number will stay around 52. As long as it's above 50, we're growing.
Stuart Hoffman, the chief economist of PNC Financial Services. Thank you so much for joining us this afternoon.
Thank you. Good to be here.